You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Now, before we get cracking with this week's episode, I'm going to ask you to indulge me for a second. The Rewa Council election window is open, and yours truly has nominated. If you're a fan of the show or generally believe I would be an asset to the council, I'd love your support. There are 1,600 ordinary members of WA, all of whom are due to cast their vote. If you're one of them, I'd really appreciate your vote. If you work for one of them, you can support me by flicking your boss a text and asking them to put their vote in. More than ever, Rewa needs a strong council backed with informed and passionate individuals that can drive the industry and general home-owning population in the right direction. I'd be honoured if you helped me take a more formal role in that mission. Now, for this week's episode, good morning everyone, welcome to Perth Property Show. My name's Trent Fleskens, your host as always. We're going to have a quick chat with Vanessa Rader today. She's been in a number of times. She's our commercial industrial expert. That gives us a lot of context on a national level so we can understand where we sit in the West Australian level. Popping over from the Railway office in Sydney as she does. Thank you so much for your time.
Thank you.
I reckon we start today, if we can, Vanessa, with the bad news first, or the less exciting stuff. And this has really turned on its head in the last 6 months, I'd say, and that's childcare. Last time we spoke, childcare was sort of chuffing along.
Yep.
And over the years that we've spoken childcare, I think I'm probably paraphrasing you here, saying it's the golden child, along with industrial.
Yeah.
It couldn't really do any wrong. What's happened to the childcare space? Because it is absolutely fallen off a cliff in WA.
Yeah, it's one of those asset classes that was a good price point. It always had really good returns, income subsidised by the government to some extent. Yeah, it's been tough, and it's not a WA story in terms of what's happened. It's fallen off a cliff. It's across the board, no matter where you are in the country. Childcare is the asset class that a lot of people aren't really investing in. Occupancy, there's like an oversupply. There's been a lot of development over the last 10 years even, but more so in the last kind of few years. We've seen a lot and bigger centres that can have a number of children. There's just not enough kids to go into those centres because there's that competition that's been happening. A lot of uncertainty with some bad press, I suppose, as well.
Pedophile stuff, let's put it on the table.
Yeah, okay, so yeah, particularly in Melbourne, you speak to a lot of people and they've just pulled their kids out of childcare if they can somehow make it work, that they don't want to have to deal with that, even if it is subsidised to some extent by the government. And that's had a really negative impact, obviously, on those businesses. And we've seen a lot of childcare businesses fold. The other piece to that as well is staffing. And I know with the budget, not the recent budget, but the budget previous, there was a lot of investment into making sure we had enough early childhood carers and the education was there to make that available. But it's just really hard to get good staff that are consistent. Because at the end of the day, if you're sending your kids to childcare,
You want a relationship.
You want to have a relationship, and for them to be there next week and next month and next year even. And when that's not happening, then we're seeing more families jumping around trying to find a better location or a better deal or a consistency.
Well, they've got choice, as you said,
They've
right?
got choice.
An oversupply leads to choice, leads to a lack in fee growth, which leads to a lack in rental growth. And as construction costs continue to rise, that squeezes the ability for it to work for a developer to provide that supply. And there's the cyclical nature of it going around again at some point in time in however many years, I guess, the malaise in this sector has to roll on. You'll see closure after closure, repurposing, rebranding, no investment in new supply, eventual critical mass of immigration of new kids coming through over the years, and then you see the cycle go again. It's interesting how there is a bit of a boom-bust feel to this, though, where every suburb was receiving 3 or 4 new centres.
Yes.
And really it was, can I be the newest, the sexiest, the coolest looking one on Instagram so I get most of the kids?
Yes.
And the ones that were built 10, 15 years ago just fell to the wayside, even if they were still providing a good service. And then you got to ask yourselves, which ones are the ones closing down? We already know that over 30 have closed in WA this year, which is probably a very small fraction of the amount that have come on in the last 5 years. And there's an understanding that a multiple of that will continue to close throughout the next year.
Well, a lot of those businesses that are operating on, less than ideal occupancy rates, how long do they really have?
Are they the big institutional brands that are closing across the country?
We're seeing a lot of, particularly those really large centres, so I'm talking about 100 plus children, they can't get enough staff to staff those, and so they're just closing doors on them and pivoting those kids into another centre that they own if it's logistically close by, which is a really bit of a concern, because what do you do with some of these really sexy new assets that are brought to the market that are really large? We're seeing more and more families rather the small ones because they that kind of closeness and having better indoor-outdoor
personal touch,
all that sort of stuff. So there's a combination of
you can't
both
really repurpose a childcare centre.
Well, this is the thing. What can you really do? That's a hard one to see what's going to happen.
The only way out of it is to grow out of it, really, is to have more kids being born or being brought in.
Well, it is a cyclical thing, but we just have been this period where there has been too much supply come on in a short period of time. And it's interesting, if you look at all our population data, like WA is benefiting still from population growth from other states. Your net interstate migration is still in positive territory, and you are getting overseas migration. But a lot of these people that are coming from overseas, they're looking after their own kids, not going to stick them into childcare. And we aren't having enough kids. That's the other piece as well. So it's going to take quite some time for this to wash out, I would think. But I think that some of those smaller assets, kind of 60 kids sort of size or less, are the ones that are probably going to come out of it better.
Well, they're the old ones. And that's the interesting fact about it, is the older centres usually trade at a higher yield, which means a lower value per brick, if you put it that way. Let's pivot into that. What happens to yields in this space? Are there still buyers out there buying successful centres that are nearly full, or is it just no one's renting, no one's buying, it's a bit of a dead space?
There's no urgency. I think there is people out there still happy to purchase these assets, but there are few and far between, so there is going to be that upward pressure on yield, and it's got to be a very, very secure lease covenant. But it's very hard to say. Things on paper could appear very secure and long-term, but that's not always the case. So, look, I think there's far less buyers there in the market at the moment for childcare. And this is across the board. This is not just a WA story. People are looking at alternative investments that can offer greater security with a big multinational tenant or something like that. I don't know, fast food or medical or something like that. And they feel more confident with that.
Well, let's segue into that then. What is the fast food space doing in Western Australia right now?
Well, there's always transactions going on and the yields are so tight. I probably shouldn't have spoken about this because I don't understand how it really stacks up, to be completely honest, but they're very, very tight yields, like sub 4% in a lot of cases.
Which is less than a term deposit in a lot of banks.
I know. I don't understand why that seems like a good idea to investors, but I think they do like the idea of I don't have to think about it. I've got money.
There'll
I'm just going
always
to put
be
it
a
there.
Macca's here.
There's always going to be a Macca's here. And if there isn't, it's on a main road location between two things, or,
It'll get released to Hungry Jack's.
Yeah, exactly. Or we can do something with it. You could probably turn it into residential or something if it's within the middle of a field sort of area. So, yeah, it's one of those things that was service stations 15 years ago.
Well, and that seems to have fallen off a little bit as well.
Yeah.
Why?
Yeah, I don't know.
The EVs?
Oh, don't get me started on the whole EV things. But can I tell you, for the last, 3-4 months now, the Tesla Y has been the number one selling car. And
They don't need a service station.
No, exactly. But the number one, like I'm talking about across all vehicles. So that's pretty amazing. A lot of people freaked out by, obviously, the increase in fuel costs, what's going on more broadly around the world. And so we've seen this huge uptick in electric vehicle sales. But in saying that, it's still only 1.5 or 2% of the car population. So, it
will take a while to filter through.
It'll take a really long time.
My view is that service stations, inherently, their profit is from getting cars to stop there at their coffees and their Mars bars, right?
Yeah.
The same thing's going to happen. You already see it in China, where the EVs are stopping at similar venues to swap their batteries out. Takes a couple of minutes. Pop in, still get your coffee. It's the same service, you just got a different loss leader in that sense, right?
And we're still developing service stations. If you look at the ones that are being developed now, they have better kind of food and beverage offerings within there because they realise, because we don't have super, super fast chargers and stuff, and you have to have the capability, the connectivity and stuff like that to make that happen. But people are still going to go in and they're going to kill a little bit of time and they're going to buy something to eat. Like, look at a 7-Eleven. Like, they make all their money, or they were making all their money from Krispy Kremes and coffee, not necessarily the cost of the fuel.
I think that will be the same with regards to the offering one day that will happen with people's need to charge their battery rather than fill their tank.
Yeah.
In 30 years, we're talking about the word charge rather than fill.
Yeah. But the thing with that, though, is that they can have the option to fill or charge their battery in lots of different places. It doesn't necessarily going to have to be a service station. So what about retail centres being more clever and making, particularly if they've got solar and things like that, to be putting way more charging facilities there, because then that increases the dwell time of people going into the centres. They can walk around, and that's a good thing for the retailers as well.
You see the large format supermarkets already doing that, don't you?
Yeah, that's right.
Let's segue into office There's a bit of a story there in Perth.
Yep.
Much to my disgust as a leaser of the office space myself. But there's a good story, isn't there?
There is a good story, and I've always been I love Perth, so I'm happy to, when things are going a little bit better for Perth, to kind of talk it up a little bit, much to my East Coast people's disgust, I suppose. But yeah, so the Property Council brought out their office market report just the other week, and I had the pleasure of going to Canberra and giving them their results in Canberra. And if you want to know a really bad office market that had more than 100,000 square metres of negative take-up, that was a tough room for me. In Canberra.
See, that surprises me because we currently have a government that just wants to get bigger and bigger and bigger. So are they just letting all their staff work from home?
Yes.
Okay, well, that was unequivocal.
So if you look at the Civic, like in the Canberra Centre, vacancy is like 26.4%.
And what's ours?
Oh, it's 15.4%. That's ridiculous, 1 in 4. And also, they're not even there. They're taking up less.
But they're not even using it.
So what does that mean for the retailers then? Poor coffee shop downstairs, he can't survive. So Perth, really good result. So I know that vacancy is 15.4. That still seems like a big number. But in terms of take-up, which is the change in occupied stock, nearly 30,000 square metres of take-up in the last 6 months, which is really, really good. So if you look at vacancy in that kind of prime end of the town, so kind of the A-grade assets, that continues to decrease. Not a lot of new supply coming into the market.
Yeah, we're not bringing on new supply. Does it just mean that less people are working from home than they used to, or more businesses are opening up, or both?
It's both of those things. But you've never had the same work from home issues here as other places around the country. And this is not a time for us to start whinging about how terrible Melbourne is, but I will, because vacancy is 19% there. But yeah, so it's one of those things that there is kind of business growth. People are looking at relocating into better quality spaces and then taking up more space. It's a good news story for the local economy, and it's a good news story for the office market. And like you said, that supply pipeline is very limited.
There's no money in it. Like, it just costs too much to build this
So what do you think
stuff,
that's going to mean to rent then? So what's that going to mean?
Well, eventually rents go up.
Exactly, and the rents
just
here...
like my landlord's trying to do to me.
Yeah, but the rents here for your prime end of town is so vastly different to how much the rents are in Sydney and Melbourne and even Brisbane. If you rented a premium sort of property in Sydney, you're looking at $1,700 a square metre.
And we're paying more like $500 here, aren't we?
Exactly.
Yeah.
So if you're going to build something new here, you're going to need those sort of numbers to make it stack up. And there's such a big variance in that.
So it won't. It just doesn't happen. Yeah.
Maybe it will. At some point, there won't be anywhere for people to go.
Isn't that funny, though? Because I've been a proponent for suggesting for 6 years now that there's no reason why Perth's residential median won't get to Sydney's if it continues in the way. And look, we're getting very close.
Yes.
Given how Sydney's free-falling by the day at the moment.
Free-falling, that's
it
a bit...
It is free-falling,
Free-falling.
Vanessa. North Curl's down, 20%?
You're looking 1 week-on-week data or something?
No, in the last 12 months.
Yeah, okay.
You can hear a Sydney side on the other side of the table. So that's getting very close. But you've just pointed out the stark difference there in the premium space between Sydney and Perth in the commercial space, in the office space. Why is there still such a difference there in the commercial office space when in the resi space it's getting closer every day?
That's a really good question. I don't have an answer to it, so I think that it will catch up just like the residential market did catch up too. A lot of the same tenancies, a lot of same businesses.
Big businesses here.
Big businesses here, and there's businesses that are also paying rent in other places, so they know that's what the rents cost, and it looks like very cheap offerings here. And it's not just been a Perth CBD story, even West Perth. Vacancies that were down there, 12.1%. They've had positive take-up, about 6,000 square metres in the last 6 months, which is better than most other places around the country.
Yeah, well, that's a lot of square metres for West Perth.
That's a huge amount of square metres. You know, if that vacancy continues to decline, there's going to be that upward pressure on rents eventually.
Yeah.
Or if affordability comes to play, people will just have to move into not as desirable accommodation, but then do you attract the staff? There's like a whole lot of conversation that goes along with that.
That's right. Well, if you think about the price of rents here, if that's what's keeping businesses here, for example, that could be national. It's keeping jobs here as well, isn't it? So it's interesting to think about the connectivity of that. What about industrial? An industrial story in Western Australia, and I think nationally as well since COVID and the decentralisation required since that for things like delivery and logistics spaces has led to the biggest boom, if not one of the biggest booms in asset classes across all classes since COVID. How sustainable is it though? Does it get to a point where the tenants start turning around and saying we can't do it, we're not going to do it anymore? Because I'm finishing off a workshop in the industrial space near where AUKUS is going to be, and we're reaching some pretty lofty heights there, but I can imagine it starts to impact the profit line of the people I'm leasing to it as well at some point.
Yeah, at the end of the day, it really does come back to this issue of if there is demand for the space and there is not enough land supply that can provide those facilities, it's just going to be a demand and supply equation. We've had some really big results in terms of rental growth. Obviously, here in WA, it has slowed down. There was a period where vacancy did increase a little bit, and that's come off a little bit again. But the rental growth has just been a little bit more stable in the last 12 months. Well, yeah, but I think that at the end of the day, if we're going to see new business data come out this week as well, if there's the continued growth in small businesses that require this, industrial type facilities, that will grow the demand. Furthermore, we've also got all those big users, like you said, all the logistics. When you've got that population that comes here, the population demands commercial property, no matter what it is. And like, I know that we kind of poo-poo childcare, but population growth grows. You need more medical, you need more retail, you need more
not
industrial,
just
all that stuff that goes along with it. Maybe not to the same level, but you still kind of need it. So if you're getting that population pool, that's what's going to happen. The other thing as well is that investors still like WA because it looks like good value for money when it comes to industrial.
With the yields.
With the yields. That's going to continue to be here. But yeah, I see your point though. What does that mean for the end user that has to pay the rent? And that's why we've seen a lot of owner occupiers just
buy their own stuff just
to shelter themselves.
You made a good point off air that South Australia, and I didn't know that, has decided not to charge stamp duty on industrial commercial assets.
Yeah.
Stamp duty is the meth for state governments. How have they weaned themselves off this, and why? And is it the sort of thing that our state government should be looking at? Because the last thing they want to do right now is help anyone out with a stamp duty reduction.
Yeah, the South Australia story is actually super interesting. South Australia was always really down the list of places for people, commercial investors, to invest in. It's always those kind of East Coast markets, then WA, and
Bit of a backwash.
Everyone forgot about what was there, what was going on in the middle there. They didn't have as much population growth, and generally there wasn't as much vibrancy. Their office market's been doing pretty well as well. But in more recent times, there has been a real push by the government just to create a lot more business growth and vibrancy.
Take away the friction.
And bring in more investment. And as a result, so if we look at transaction activity in the last financial year, WA transaction volumes have actually come back and it's been lost to South Australia. If you really look at that data, here in WA, about 40% of it's actually been industrial. So industrial is still the main thing that people are investing in here. But if you look at South Australia, you're nearly on par in terms of how much investment goes into WA compared to South Australia by commercial investors, which is huge. It was close, but it wasn't that close. WA was always the front runner. So for that to kind of flip around is pretty interesting. And why not? If you've got an economy that's doing really well, there's a lot of investment into the economy, you're not paying the stamp duty. They've got AUKUS there as well. They've got a lot of investment into infrastructure. They have underlying supply-demand issues when it comes to industrial land as well.
Well, if you're someone from Sydney or Melbourne and you look at Western Australia and South Australia as equally irrelevant to your life as most people do,
and then just purely looking at the metrics of it.
And you go, well, I can save 5% straight up on not paying stamp duty in that state. I can understand why people would do it.
Yeah, and that's what we've definitely seen through the latest lot of data. And in terms of returns, it's returning for industrial in South Australia. It's very similar to WA, probably a little bit less, but it's still a really good news story. So if you've got a long-term hold perspective on anything, you're going to do pretty well. It's just an interesting observation because even into institutional investment, that South Australia was always super far down the list. We've seen a few big office buildings sell there. We've seen some hotels sell offshore money into South Australia, like more than we have in the last little while anyway.
Well, I think a lot of it's got to do with what seems like a pretty progressive premier and government there that will probably be historical by the time he's finished that story, which provides that good sentiment, that good feel, and sometimes that's all there needs to be as long as you've got population growth to run a very healthy lifestyle and healthy market and economy over there.
And it's not as if residential is even affordable there anymore. It's always been that WA, South Australia story. I write a lot of our Ray White stuff on the resi market as well. And like month on month, growth has been even in regional markets, WA, South Australia and metro markets. They've been the top two for the last however long. So they've been running kind of slightly behind, but like right there.
People have been betting against the South Australian and West Australian market for a while now, saying it can't get much more. Now, obviously, I'm a biased West Australian. I think there's still another 15-20% in our market. But looking from afar at the South Australian market, you've got to ask, how is there any more strength in the resi space in South Australia, given their incomes are lower and they've already grown so much, a little bit more than we have as well? So, you know, that would have made me think, well, how can there be any more optimism in that capital space in South Australia, given where at least their resi space is.
Yeah, that's a really interesting one, because when you talk about the difference in the income levels, it is actually quite substantial between the two places, WA and SA.
How are they doing it? If they can do it, then why are people questioning whether we can't?
I'd actually totally agree with you, but we're seeing more. There's been so many infrastructure projects. There's a lot of mining projects and stuff as well, and defence in South Australia, which is starting to
they've
see...
got their own AUKUS story, don't
Exactly. That's starting to see some of those income levels increase, and people are looking at a different lifestyle. If they can get a good job, they're happy to go there. They'd rather go there than Melbourne anyway.
That's what it sounds like. It sounds like more of a pull than a push in that space, and that Melbourne's just its own worst enemy right now.
And also with the university, a lot of investment like there is here in WA. So a lot of people do go to South Australia to study, and then they really like it there and they continue as long as they can get employment and things. So that kind of is an attraction piece too.
Let's round out with medical. You did mention it for a second then. What do I need to know if I want to invest in medical?
Medical's been a really interesting asset class. It was really hot, probably when childcare was really hot, and then it kind of came off the boil a little bit.
Don't we all need doctors because we all get sick?
Yeah, we definitely do, and that's something that's actually, it's coming back. It's all about really good quality. If you can get big assets that have a combination of kind of specialty and allied health as well as GPs and hospitals and things all in kind of the one-stop shop.
Diversified, those radiologists, your GP.
That are doing the best. Because at the end of the day, any sort of medical tenant is sticky. Think about your family doctor that you've gone to for the last whatever. So they're staying there. Do you know what I mean? Yeah. Also, if they're investing in the fit out, they need, if it's a radiologist or whatever, they need specialty so that they're not going to want to argue with you over a bit of rent and then like nick off and have to have the huge expense of relocating.
I assume the moving truck for an MRI machine will be pretty expensive.
Exactly. Look, I think that space, and because we are getting the population continuing to increase, it's only fueling a greater need. The other piece of that as well
and older as well.
Older, I was going to say, well, the ageing demographic, but also people are just more interested in their health. So it's kind of the alternative type health things or just preventative medicine as well. So a lot of the specialists, people are busy and people are going to them. So people are more conscious about their health and they're doing more things to live longer. But also a bit of a byproduct, I suppose, medical, the idea of aged care, because we know the living sectors is doing so well, living sectors being kind of housing and student accommodation, those sort of things. But no one's really spoken about aged care for a long period of time.
Is that because it's an expensive version of resi?
It is an expensive version of resi, and there was obviously royal commissions into that. Like during COVID, there was a lot of kind of bad stuff that kind of went on, but we're seeing a bit more of it because it's a huge need. And if we want to get people out of existing homes and all that sort of stuff, so I think that's something we're going to hear a little bit more about.
But what needs to happen, like, it's all well and good, and I agree with you 100% because it's been bubbling under my purview for a while now that there hasn't been enough investment into aged care. There's obviously going to be more of a need for it as more people keep living longer and as more of us, and we're just staying alive longer with less support from the family. The need's going to be there. The supply certainly hasn't come on since COVID because, as we said, it's just an expensive version of resi.
And
that's
staffing is just as...
Staffing is another layer.
Yep.
So we put all those things together, you pop that into ChatGPT, and ChatGPT comes back and goes, well, clearly there will be an undersupply.
Yes.
But there's so many more things that happen there, right? That just like childcare, there probably needs to be some sort of government subsidisation. Now, we haven't heard about that for a long time. And there's obviously a lot more complexity about who your operator is. Are you an owner-occupier? Well, no, I'm not, so I'm not going to run my own aged care centre. So who would lease it off me? Is it an Aegis, a Brightwater, these sort of people? What do they pay for rent? How does it work out there? I think fairly sophisticated developers even would sit back and go, if I haven't done it before, I'm not sure what my business case looks like. How do I build that out? And what am I expecting with regards to returns?
Yeah, I think it's one of those things that we're going to get a lot of lessons very quickly from what's happening overseas. So there's been a number of aged care portfolios that have sold at the end of last all to offshore investors, so like Canadians, and they see it as a good asset class and they can see that the need for it because they look back at what's happening in their own country. Just like we saw PBSA, so student accommodation, like no one knew how to make that work here and build to rent, those sort of things. Still don't know how to make that work, but yeah.
No one knows how to build to rent, but except
but anyways,
the
let's just move on from that. But student accommodation is a really good example. It took a whole bunch of groups coming from not the US but Europe, everywhere other than here, to come and say, like, why don't we have this as a thing? And they're doing quite well. So I think it's one of those things that's going to take a little bit of time to find out those kind of results, but I think that we will, we might get some lessons from overseas and some of these kind of new buyers in the market. And also when you're looking at the development of new residential areas, which is obviously there's not as many residential areas in all of Australia anymore, but is it just because you needed to have a childcare, for example, in those kind of new estates or schools and things, is it going to be like a mandatory, we need to have over 55s just to affordable housing? Is that another piece that we carve out? Because then you're close to family, you're close to where people want to live, it's got the shop down the road, all those sort of things. I don't know where it's going to land, but definitely needs to be thought about.
My next question is that this all comes down to the planning space, because if in a structure plan level, none of it's really allowing for those special uses, then at some point in time, it has to come down to aged care provider coming to the local government and saying, hey, we'd like to do a scheme amendment to put this critical service in your suburb but you don't have one, and then it becomes a big hoo-ha in the council, and it's always a reverse engineered thing. I think you're 100% right. In every structure plan, there's already space allowed for primary schools and high schools. Why aren't there spaces allowed for aged care?
Yeah.
There's space allowed for medical. Must be medical in this location.
Yeah, I think that's what's going to have to happen. We are just so slow to the uptake on these things, and it's such a short-sighted way of doing things, because we can see quite clearly that population is ageing, and we don't want them to stay in their own homes, because we want those homes to be unlocked for other people to come through and to move into as well. So
I think it's a mix, Vanessa. I think as to the extent you can keep them in their homes, it's cheaper. But there, I can see the argument of why is one 90-year-old lady living in a 4-bedroom home that a family could live in. Well, I think there's probably arguments for and against that with regards to cost, but also quality of life, knowing how my grandma was until her final days. But I do understand that when that day does come that they need to move out, it shouldn't be 25 kilometres from where they're living.
100%. There needs to be, well, at the moment, there is like no options.
Yeah.
So that situation, where does that 90-year-old go? If there is a really local facility that is a 1-bedroom modern sort of thing, it has on-site help and call, and the family is nearby, that's an easier decision to move into something like that. But at the moment, that's not a thing. Yeah, you're not going to move 25 kilometres away. Like, you don't want that.
I think about parts of East Wanneroo right now, and there's certainly no provision for that anywhere in that district. Yeah, I think it's a great point to leave it on, and one that hopefully some of the more sophisticated developers listening to this podcast will have a think about and go, hey, where in Perth is there a big push for population, and have they provided for things like medical, things like aged care, because they're going to continually be storage, another part of our conversation over the decades.
Yes, yeah, that's a really interesting one. Storage is a whole another topic. We've been some big kind of portfolios of that too. And with the oldies, what are they going to do with their big massive tables that they don't want to throw out in their 4-bedroom homes?
Yeah, the Jarrah tables are another one, too expensive to move, I think.
Exactly.
Vanessa, thanks for your time.
Thanks so much.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!